Guys. Thank you all for joining and listening to this live AMA session. I'm together here with the other two co-founders of Rio, Christo and Valentin. And yeah, we're just gonna give you some insights as to the latest basically the latest news regarding Creo and overall the latest news regarding RWAs, why we're making a change here and what's happening. So I'll let the other two members of the founding team speak as well.
Hey,
Guys,
Yeah.
sure. Hi, guys. My name is Christo, and I am a token economist. I have been doing this for a very, very long time, so I have a lot of experience doing this, and I'll be covering anything related to the tokenomics.
Hey guys, my name is Val. Me and Tivo, we both work together in a couple of banks and funds, and essentially that's how we met. With regards to Rio, I'm in charge of its operations and in some cases, product strategy and technical implementation. So anything technical related, product related, you can share with me.
of course, yeah. By the way, guys, we have a couple of questions which are already submitted. Actually, we had a lot of questions, so we have kind of selected like the top 10 which grasped our attention. I'm gonna be sharing them now, and then I do like this to be kind of like a round table. Present ourselves as the founding team, but also discuss our views and opinions and why Rio is making a difference when it comes to RWAs. So I'll go with the first question, and then it's open table, of course. So then my colleagues will share their thoughts here as well. What are the biggest challenges in scaling RWA tokenization globally? How is Real Finance positioning itself to overcome them compared to other L1s? So, yeah, guys, let's see who is basically what we think about that. Chris, do you want to go first?
Sure, absolutely. Essentially, I think that the core problem which we are facing in RWAs at the moment is, for me, decentralization. Essentially, why are we all in the blockchain space? We are in the blockchain because we believe in a really decentralized future. But RWAs are here to stay, but in their current iteration, if you look at what RWAs are doing, they are always relying on a central counterpart. There is always a tokenization company which is doing the tokenization of the real world assets, and it is becoming a single point of failure. And if we want to scale RWAs in the future in a truly decentralized way, we need a solution to do that. And I think that essentially this is what we are solving with RealFin. We are making sure that not only RWAs can be tokenized, but they can be tokenized in a really decentralized, permissionless, and trustless way.
Yeah, from technical standpoints, to be honest, most of our competitors they offer generic tokenization. However, utilizing, it's Christos' main concept, utilizing the business validators into the consensus layer and actually making sure it's every single tokenized asset carries its risk score in its metadata is something that quite significantly makes us different than the rest of the projects and layer ones that are positioning themselves as RWA oriented chains. So, as Christos said, implementing those features at the core of the blockchain um, allows us to make sure that the process is trustless. So, the trust issue is solved, it's secure and decentralized at the same time, essentially solving the RWA trilemma, as we like to call it.
Yeah, okay. So I might add on a final note here as well, my personal opinion. And given the fact that my personal expertise is mainly in risk management, and especially in terms of calculating probabilities, that's kind of the core of any risk, let's say, assessment. When it comes to RWAs, from transitioning from the traditional world, especially in terms of financial instruments. Again, single point of failure, but that's on a tokenization level, that's already on the on-chain aspect. But it's just as important to have actual good valuations of the tokenized assets. So you do need to have reliable partners, you do need to have institutional to a certain level adoption, let's say, and especially for custodials, when we speak about custodials for the asset which is off chain, so the actual real world asset. Because let's say, and also from legal and regulatory perspective as well, it's not how to say it, it's not enough just to tokenize something. You actually need to have the value of it in the real world, rightly calculated, rightly estimated, if it's private credit or if it's let's say real estate or any other financial, let's say, vehicle or instrument. But also you need to be very secure and safe that this asset is entangled legally, and it's kept at a third party, let's say at the custodial, while the token is in circulating supply. Because imagine I have, let's say, some equities which I want to tokenize, whether I'm a physical person or let's say a company. If I don't deposit them at the custodial party, at the third party, and I just decide to tokenize them, put some token on chain on Ethereum, I'm actually free to sell them in the real world. I'm the better of those, and that would be, that's kind of like, of course, first of all, illegal, and it's very unsafe and unsecure for investors. And I think that this is also a problem: the fact that you do not actually know where the assets are held and with what, let's say, priorities. And here comes one of the main aspects which we were focusing on from the start: actually having partners which come from the traditional finance and partnering with banks who can actually provide this custody of the asset and provide the data of the real world asset and bring it on chain through us, basically. Do you guys agree? Or I mean, as I said, I do want to be kind of like a round table, and we haven't rehearsed anything here, so yeah. Your opinion, guys?
Yeah, we obviously we totally agree with you, and I believe for this question we were kind of exhaustive on the topic, so maybe we can
Yeah,
maybe we
move
can
on.
move on the next one.
For retail investors like me, what's the minimum entry point going to look like? Are we talking 100 or 10,000 to get into these RWAs? If you want, I can start first and then you go around. Uh, Personally, one of the beautiful aspects of tokenization is also the fractionalization of the assets. So let's say if you have a government bond, which is, the entry point for such kind of bonds is usually above $100,000. If you tokenize it, you can actually tokenize it to a single dollar per, as a fraction of the actual bond. So yes, it depends on the RWA. It depends on the issuer, of course, and what they're aiming to achieve. But at a high level standpoint, there is no minimum or maximum. You can fractionalize it, to very small pieces.
Yeah, as Ivo said, from a technical standpoint, there are no limitations and like minimum or maximum boundaries. Uh, from the technology standpoint. However, since and it's important to underline that since Rio is the infrastructure for, let's say, other projects, tokenization companies to come build on it and offer their services, the minimum slash maximum levels would be basically decided by them. So it's
Right.
very dependent on the issuer, the project itself. But from technological standpoint, there are no limitations with regards to uh, how much you need to have in order to enter the RWA space.
Chris, do you want to add anything else to this?
No, guys, I think you pretty much covered it. No,
Yeah,
no
yeah.
reason to hammer on the same point.
Sure. No, of course. I'm just, I try to be inclusive. Okay, so next question. I see Viner Privat backing you. How are traditional financial institutions actually reacting to RWA tokenization? Are they excited or secretly worried about losing control? Okay. Anyone wants to go first?
To
Christopher?
be honest, yeah, maybe I could jump in. To be
Sure.
honest, more and more financial institutions are looking into the sphere. Some of them are, let's say, braver than others. So, but it is an interesting topic for them. In the case with Wiener Privat, they really grasp the concept and they do want to be a part of the future, let's say, and not stick in the past. Hence, they've been very supportive and very open and interested with regards to our partnership together. So what I can say is that we have a full support and great partners in their face. But yeah, maybe Ivo wants to add some more points with regards to our
Hi.
relationship.
The thing is, the Wiener is basically the first official one which we have announced, but we do have two more actually on the way. I'm giving some alphas here, and the thing is, most financial institutions are really interested in the topic, and they do see the future and the potential of tokenization and blockchain as a whole. Some of them are a bit more hesitant. Again, it depends on also, regional, let's say, restrictions, or basically some of them are in jurisdictions which are a bit stricter, etc. Uh, it also depends on their line of business. So, for example, with the case of Viner, they're heavily involved into real estate investing and funds, etc. So, for example, for them, tokenization makes a ton of sense. For others, in terms of, let's say, private wealth management, then maybe not so much. But overall, what I have noticed, and we were invited, back in June in Silicon Valley. I've spoken there with quite a few people from US Bank, from JP Morgan. Everyone is going into the sector. They're not perhaps directly investing into it, but everyone is working on actually introducing products or services related to their core businesses through the blockchain as well. On a separate note, again, in Barcelona, for example, more and more fund managers are looking into actually acquiring tokenizations as well. So it's not only, let's say, providing the tokenized assets, but the liquidity to actually acquire them as well is starting to grow. And I think that with an infrastructure, and that's why we are actually creating Rio. With the right infrastructure, it's going to be even easier. And they're very open-minded when it comes to quality, let's say, assets on chain. I mean, if we can offer these kind of quality assets on chain, they would be acquiring them. And I think, the liquidity issue, which everybody's talking about, is quite easily fixable as long as you have the right infrastructure and you can you can proceed basically.
I think that we are essentially, to answer the question directly, way past the question of if, it's just a question of when. If you look at, we have BlackRock, we have JP Morgan, we have Franklin Templeton all getting into tokenization, and essentially anyone who is scared of getting into this space would eventually just be left out. So at the end of the day, I really don't think it's a matter of institutions being scared. I think we are way past that point.
Okay, so next question. What's the plan for ensuring liquidity in the secondary RWA markets once assets are tokenized on the Real Finance mainnet? Actually, we covered a bit that part in the previous question, but again, tokenizing an asset doesn't mean you make it more liquid, and also doesn't mean that you make it a better asset. I think it's kind of the question is, kind of like the chicken and the egg. If the assets which are brought on chain are good, there's going to be liquidity for them. And again, that's one core principle why we went, towards the traditional banks, etc. They are usually the ones holding the good assets, right? So, having partners within this sphere and bringing their assets on chain will ultimately involve other players as well. At least, that's my opinion and what we have seen so far.
Yeah, in addition to that, as Ivo said, we kind of answered this, but when making sure that the onboarded assets follow standardized framework and procedure, and when tokenization is done right, and when there is proper risk scoring and analysis and auditing of the assets, that is another way that will basically increase the trust for more, let's say, sophisticated investors as well. So we do believe that following this framework that we've created will bring some fresh liquidity to the RWA sphere, as well as what Ivo mentioned. So bringing more quality assets and making sure they're brought on chain in the right way. That's pretty much our strategy.
Christo, there's one here for you, especially for you, man. So, your dual validator architecture plus disaster recovery fund is very unique. What gap in existing RWA chains did this approach specifically solve?
It really solves the permissionless and trustless nature of the process, as we opened up earlier. Right now, blockchains are predominantly a technical construct. By introducing such business-like utilities on top of our core architecture, this what enables us to really onboard RWA in a truly permissionless, trustless, and secure manner. At the end of the day, this is what we want. So really the goal of this was to achieve this missing gap in the current infrastructure, which is not covered by other chains. And the only way to do this was to introduce such kind of constructs within our tokenomics setup.
Okay, I guess we have answered that. Actually, I'm sure Christo can speak actually 4 hours on this, but yeah, let's stick to the next one. As a builder or partner in the Real Finance Alliance, what are the most effective strategies for integrating RWA with DeFi composability? Example, lending or yield farming, while maintaining an on-chain audit trail for legal accountability.
I think this one you should take, Ivo.
Okay. Well, first of all, having assets tokenized is, one of the is basically the first step. Like once you tokenize them, either you're looking for funding or you want some kind of transparency towards your business or towards your, let's say, maybe treasury hedging strategies, or Christo was actually giving a good example here when it comes to let's say DAOs, and also including stable coins as well. So tokenizing the assets, putting them on chain is one thing. Then you achieve some transparency, but at the end of the day, you also are looking for either some financing needs or interoperability between the different projects which are within the ecosystem and on chain. So let's say leveraging on those assets is a huge part. Very few are actually doing it, and the reason again for not accepting certain tokenized assets as collaterals by most, let's say, DeFi protocols is because they don't trust the value of the asset, and they don't trust how it has been tokenized. So these are currently deficiencies which we're, again, at Real Finance, we're solving. And so yeah, perhaps you want to share a bit more on that, or so you have once again leveraging opportunities, you have exchange opportunities, you have custodies of those assets. All of these could be integrated as long as you have trust in the actual asset and the structure it has been brought on chain to. You guys want to add anything, or should I move to the next one?
Yeah, maybe let's move to the next one.
Okay.
If Christo doesn't have anything to add, we can move.
No, let's move to the next one.
Okay. How will global regulatory evolutions such as MiCA in Europe or the SEC in the US impact RWA adoption in 2025? And what role will dedicated blockchains like Rio play in ensuring compliance without sacrificing decentralization? Who's up for this one?
Sure, I can cover this. The important thing at the end of the day is that blockchains are infrastructure. It is up to each and every project to ensure that they are compliant with the relevant regulations, because you don't only have MiCA, you have things like VARA, you have the Genius Act, essentially, which is covering across very different jurisdictions. You cannot essentially ensure as a single chain that everyone else is compliant. It is up to each and every project to ensure that they have sufficient compliance. I'm sure that over time we'll see the emergence of tools and protocols which support exactly this, the compliance of different projects within the chains themselves for specific jurisdictions.
Yeah, actually, if I might add to this. How do we actually play ensuring compliance? As Chris said, we are the infrastructure, so we couldn't be responsible for each and single player out there or each asset issuer, whether they're compliant or not. However, having the three elements and the three pillars, as I like to call them, tokenization companies, then scoring companies, and then insurance companies of those assets. If, let's say, a certain asset issuer and a certain asset is brought on chain and it has all of these three elements, you're pretty much sure that someone has done the DD. It has scored the asset. It has evaluated also whether it's again, the compliant aspect as well. For example, we work with Experian for credit scoring, etc. But Experian also looks at at the legal, let's say, structure of the companies, of the asset owners as well. So we cannot guarantee it, but if you see an asset which has all of these three, let's say, elements on real chain, someone has looked into the compliance, let's say. Okay,
Yeah.
so next one. Um, can you share some initial insights into how the progress roadmap with leverage real full stack solutions from appraisal to governance to revolutionize the RWA secondary market, including potential collaborations with external DeFi protocols? So, please go ahead, guys. Val, I guess this is for you.
Okay, so in short, the roadmap would be as follows. From let's start from technical standpoint. Now, in probably a month or so, depending on the market conditions as well, we'll do a launch of the real token. A month or two after that, we will be releasing our MVP, and a bit later, the beta for testing. We still do need to, undergo all the security audits for the chain, and essentially around 10 months from now, we are aiming to release our fully functioning mainnet. However, this doesn't mean that we won't start operating before that. Actually, we will have the first tokenized assets on an MVP level, in partnership with our banking partners as well. With regards to partnership, we have already signed more than 10 partnerships with multiple DeFi and Web3 projects. Uh, as you might, think of, most of them are tokenization companies that we've onboarded and signed agreements so that they start building on Rio, and essentially bring their platforms and bring their assets on the Rio blockchain. In addition to that, we have two partnerships with insurance companies. Unfortunately, I won't be able to mention their names as of now, as of today. And we have several, oracles and scoring companies as well that will essentially fulfill the business validators and enhance the whole platform functionality. Uh, we are going to start releasing some of the partnerships in the coming weeks. So yeah, I guess you just have to stay tuned and so that you can
Actually,
learn
it's
more
gonna be
about.
closer than the coming weeks. I think like the first one is coming out really soon, right? So yeah.
Tomorrow or no?
No, yeah, let's keep it a bit more
Yeah, I'm
mysterious.
joking. Okay.
But yeah, okay. I guess Val answered pretty closely the whole thing. Of course, we're gonna be having and organizing different grant programs as well in the near future, and hackathons, all of that. But that again comes straight after the MVP. For now, our like core focus is the launch of the basically the utility, the token of Rio, and also the MVP straight after it, with quite a substantial sum of tokenized assets brought onto our chain. SNL1 that emphasizes embedded compliance with partners like Viner Private Bank SC. What is the progress update on your disaster recovery fund, and how will it evolve in the roadmap to support RWA's global scalability while remaining permissionless? Christo, you might want to take that one.
Sure, absolutely. At the end, the scope of the disaster recovery fund is that percentage of all fees collected on the network go within this reserve. This means that those fees are taken out of circulation in shape of the token, and only in case that there is a serious disaster within the system, meaning an asset fails to meet its obligations, and this is not covered by insurance, then the disaster recovery recovery fund comes in. There are multiple layers of protection before that. So essentially, the development which we expect to see at the beginning is that at least for the first several years, we are expecting only funds to flow into the disaster recovery fund, but obviously at any point in time we have multiple mechanisms in place in case some of the users need to be compensated for what is happening. All of this is happening on a permissionless and trustless level, so there is nothing which is being manually operated and nothing which needs to be essentially relies on some central authority to kick in. So there are no issues there whatsoever.
Okay, thank you for the answer. So next question actually is the last one from the pre-listed ones. What's your plan for driving real-world adoption among businesses that have never used blockchain before? So, for me personally, I mean, accessibility, that's probably the biggest, let's say, plus when it comes to the blockchain. So businesses which are, let's say, regional, bound by different barriers for financing, they get access to financing. They get access to fresh capital outside of their basically current ways of fundraising or of their current ways of financing. So access to much wider, let's say, audience and much wider, let's say, investor bases, to put it shortly. You guys want to add anything?
I think the biggest thing, mostly the biggest issue across all blockchains networks that we see is for the larger part, the user experience and the education. We want to make it easy and we want to teach them how to do it. So I think that if we solve those hurdles, the technology speaks for itself, the use cases speak for themselves, the value is there. It is really about solving how those people understand how to do it and helping them along the way.
Okay. Val, you want to add anything?
No, I just saw that we have two questions from the live stream.
Okay.
Let's check them out. So one of them is, how does Rio Finance plan to integrate secondary markets and lending protocols into its ecosystem? Who of you guys want to take this one?
Well, I'll give it a go. How do we plan to integrate into our ecosystem? Well, we have been within the space for quite some time. We have actually quite a lot of experience when it comes to the finance and blockchain space. So, at least initially, of course, we're contacting all of our current, let's say, partners and acquaintances, and we are basically offering them something quite unique and by design and by thought. There's nothing comparable in terms of infrastructure for RWAs, and that's where we specialize in. So this is, of course, step one for us at the moment. The other step is the actual validation by institutions, which we're having, and I mean banks, insurance companies, etc., having them built on chain and having certain assets onto the real chain brings even further, let's say, interest to anybody we have spoken up to so far. But I'm, of course, sure that the more we grow, the more actually projects will join, even without contacting us. So yeah, this is kind of like my way to go around the question. Any of you guys want to add?
No, I just saw another very interesting question that I do believe many people would be interested if we touch on.
Sure.
So there's the question. Actually, I wonder what are the limits for Rio Finance in terms of RWA? So, for example, rare earth metals are very popular. Are you open for such areas? Uh, Maybe if I could start. Uh, Yes, we are open for multiple areas. So the concept is very agnostic, let's say. We are able to, tokenize uh, unlimited types of assets, basically. Initially, we are going to start with traditional financial assets, but Ivo can, share why would be the reason and what are our, next steps in terms of expanding the types of assets on the blockchain as well.
Yes, just once again, guys, just put it into perspective. We are not the actual, protocol which is tokenizing the assets. We're actually partnering with already, let's say, quite established protocols, which are tokenization companies, and they will be tokenizing the actual assets. The thing is, on our chain, these assets are, like they're brought in such a manner that, as Christo said, they're decentralized. There is this trustless environment created for such kind of assets. Of course, we're starting with financial instruments, namely debt and equity, such ones, because they are one of the easiest to tokenize in terms of and generate returns in terms of direct cash flow and cash flow payments of towards the asset holders at some point. And the other aspect is that our banking partners, our insurance companies, etc. Uh, they get this business, and they will be driving such kind of assets towards our chain. Commodities and precious metals, as you said, I call them commodities, are indeed very popular. We're they can be put onto real chain. Um, of course, we'll be chasing such kind of partners and companies who are wanting to build such kind of protocols and tokenize their assets, let's say, on the real chain. And they are very probably the very next step from financial instruments, like, as I said, such as debt instruments. They're basically the next logical step for us. So if that answers your questions, in terms of limitations, limits for real finance, I mean, financial instruments trading overall, worldwide is more than a $30 trillion, let's say, dimension. So, possibilities are basically, there's kind of like sky's the limit here, to be honest.
Yeah, we have one more very interesting question.
Sure.
What is your strongest advantage that you think will make your team leading the market? So I could probably start on that. Uh, Both like me, Ivo, and Christo, we all come from the traditional finance world. We all worked in big institutions, financial institutions, funds, etc. So I do believe that coming from such background allows us to understand the usual pain points of such institution coming to the blockchain sphere and just knowing how they think and what would be their obstacles and making sure that um, we kind of pave the way for them to come to this sector and that's what we're essentially doing by creating a standardized framework. So there is a specific, process to bring such assets on chain.
Um, Yeah, I guess it is a really really interesting question. Again, the core here would be the team itself, as Val just mentioned, but also the other thing which I think is differentiates us and sets us on the path of success. First of all, from what we have seen speaking to people and to traditional institutions, but more than that would be up until now. Most projects, chains, L1s, they go around, okay, current existing, let's say, client base, what they like, what they don't like, and they're building around this. We actually thought on the other way around, like, okay, there is a wide, huge world around the place, right? So a lot of assets, a lot of asset issuers. Uh, we are not enemies of traditional finance. We just want to bring innovation towards traditional financial methodologies, and I think we're one step ahead of everybody else, is because we have spoken about this like 5 years ago. If you find a way to integrate what's actually happening within the real world economy and integrate it within the blockchain, that's the key to success. And I think that now the market is also prime for such kind of let's say infrastructure, because it has matured, let's say, much further than what it used to be 5, 6, 10 years ago. And yeah, involving these, let's say, entities and the business entities and the asset issuers into your ecosystem and into your technological, let's say, innovation, that would be the key to success here, and that's what we have done. Christo, do you have anything to add on this, or?
No, I think you guys covered it pretty well. So yeah, we're good there.
Maybe we should take one last question. Let me just take one. What are the benefits of holding token as long of holding your token as long-term investment? Who wants to take this one? Risto, maybe?
Yeah.
Sure. Essentially, again, this is the utility token of the network. If you look at any L1 network, as L1 networks gain traction, their core utility tokens are used for a lot of things. First, they're used for the payment of transactions. Second, if you look at, for example, how Ethereum operates, the ETH token is used as collateral and as liquidity across many, many pools. In our particular case, the token also is long-term deposited in the disaster recovery fund. So pretty much as any network matures, the use case of the token pretty much depends on the adoption of the network, and the networks that get adopted, the tokens get a lot of use cases and a lot of use. But even just apart from that, at the core protocol level, the token is used for staking for validators. So anytime that we want that a validator, whether it's a business validator or a technical validator, wants to participate in the network, they need to stake certain amount of tokens, and anyone who wants to use the network to tokenize, pay fees, etc., again, they need to use the token in order to do so.
Well, I guess we have, we cannot actually cover all of the questions, but of course, you can always follow us at our social media links, and speak with us directly also within the live chats we have, and we will happily answer any additional questions for you guys. Overall, as we mentioned, there is a lot coming in the next couple of weeks. Quite a few exciting, let's say, partnerships, integrations, and I mean, just follow us, guys. We're gonna do other AMA sessions as well. There's gonna be quite a few community campaigns which you can participate in, and I think such kind of basically speaking with you guys is always helpful, and it helps you grasp what we're trying to achieve here. And thank you for joining and listening.
Yeah, I'll definitely make sure we make another AMA because we honestly received hundreds of questions. So yeah, that should be something that happens
On a regular basis.
on a regular
That's-
basis.
yeah.
So and yeah, I quite like it, to be honest. I'm not doing a lot of AMAs, but yeah, maybe I should start.
By the way, guys, just as a special again, maybe alpha for you, like we are going to be involving different business entities into those AMA sessions and podcasts as well, especially just before launch, where you can hear firsthand, for example, from somewhere who is in the traditional financial sector, why Rio is, let's say, something which they have decided to integrate. So
Okay,
again, thank you for your time, and
it was a pleasure.
it was
Thank
Talk
you,
to you
everyone.
soon. Bye.